So Tesla just reported their Q1 2023 earnings, broke a bunch of records, the stock's collapsing after hours, as predicted. See yesterday's video. Today we're going to run through the earnings report itself and then some highlights from the call. Believe it or not, there were a couple of bombshells that I was not expecting on this call. By the way, quick thank you to everybody who subscribed to my premium Twitter content at Stephen Mark Ryan. There's now over 500 of you, and we're 48 hours in. Thanks for the support. Plenty of exclusive content already posted and coming soon. First, let's power through the earnings report itself. A couple of key highlights. Short story here, Tesla made a shitload of profit. Again, surprise, surprise. 11.4% operating margin, absolutely slaying it. $2.7 billion in GAAP operating income, $2.5 billion in GAAP net income, and $2.9 billion in non-GAAP net income in Q1. In case you don't know, that's almost $3 billion. That's a lot of money, just saying. Cash, operating cash flow of $2.5 billion, and check this out, a $0.2 billion increase in our cash and cash equivalents. Tesla now sitting on well over $20 billion of cash and cash equivalents. They could literally shut down all of their factories for years, literally years, I'm not kidding, I've done the math here, years, sell no vehicles, no storage, nothing, and still have cash left over at the other end of it. Kind of important to understand this, given the current economic conditions. Tesla is well positioned to weather any storm, including World War III. Literally. Let's hope that doesn't come to pass. Cybertruck factory tooling is on track. Model Y, now the best-selling vehicle in Europe in Q1. And Model Y was the best-selling vehicle in the United States in Q1, excluding pickups. A few important notes regarding the current macroeconomic environment. We see this year as a unique opportunity for Tesla, as many car makers are working through challenges with the unit economics of their EV programs. That's putting it lightly. We aim to leverage our position as a cost leader. Our near-term pricing strategy considers a long-term view on per-vehicle profitability, given the potential lifetime value of a Tesla vehicle through autonomy, supercharging, connectivity, and service. We expect that our product pricing will continue to evolve upwards or downwards, depending on a number of factors. Of course, Wall Street's going to ignore this.
What happened this quarter? We don't care about the future, Tesla. Tell us what's happening right now.
As predicted, just check out Tesla stock after hours, down 6.2% as I record this, and still falling. As I mentioned previously and yesterday and flagged repeatedly, all eyes were on margins, and this number, since it's 19.3 instead of 20 point something, Wall Street flipping the out. What a surprise. Again, emphasizing Tesla, over $22 billion in cash and cash equivalents. A lot of people are also sleeping on Tesla Energy generation and storage revenue up 148% year over year. Something that many people will overlook. There was actually a negative foreign exchange impact of almost $1 billion this quarter, which obviously affects everything. A combination of factors, headwinds and tailwinds. Some positive stuff for Tesla. Growth in vehicle deliveries despite major margin headwinds from underutilization of new factories. That would be Berlin and Austin. A few other bits and pieces as well. Let's keep moving forward. Lots to cover here. The Model Y, as we said, was the best-selling non-pickup vehicle in the United States in Q1. I'm sure it's nothing. It's not like it's going to become the best-selling vehicle on Earth soon, maybe this year. That would never happen, would it? No chance. And interestingly, just confirming here, since our Shanghai factory has been successfully running near full capacity for several months, we do not expect meaningful increase of weekly production run rate. And regarding Europe, the Tesla Model Y became the best-selling vehicle of any kind in Europe. If you guys want to do some math, check out Tesla's current disclosed install vehicle capacity. And by the way, every time you see a greater than symbol, this is what's known as massive sandbagging. Any number can be greater than the number that's here. Shanghai capacity could be 750,000 vehicles per year, or if you look at their peak monthly output, it's closer to 1 million, just putting that out there. Berlin, installed capacity already 350,000, and spoiler alert, stage 1 will be 500,000. Guess what? Same for Texas. They're not there yet, but I'm very confident a few quarters from now, this will say greater than 500,000, and this will also say greater than 500,000. And of course, market share of Tesla vehicles by region, trailing 12 months. US and Canada in blue, Europe in red, and China in green. Does anyone notice a trend? Spoiler alert, it's called exponential growth. Speaking of exponential growth, cumulative miles driven with FSD beta, also growing exponentially. I'm sure it's nothing. It's not like data's fundamental to solving autonomy. And Tesla kind of pointing out things they've already mentioned recently, just in case anyone missed it, at Investor Day 2023. From 2018 to 2022, Tesla's Model 3 cost declined 30%. That's not the price, that's how much it cost them to make the vehicle. 30% decline, just a few years. Regarding energy storage, deployments increased by 360% year over year. I mean, check this thing out visually, in a nutshell. Don't sleep on Tesla Energy. Solar deployments also increased 40% year over year. And regarding volumes, quote, we are planning to grow production as quickly as possible in alignment with the 50% compound annual growth rate target we began guiding to in early 2021. In some years, we may grow faster, and some we may grow slower, depending on a number of factors. For 2023, We expect to remain ahead of the long-term 50% compound annual growth rate with around 1.8 million cars for the year. More on this later. Just wanted to share this absolutely sick photo of Cybertruck in the snow, winter testing. I mean, what a badass picture. And finally, the trailing 12-month metrics. My favorite charts, every report. Pretty clear why. Trailing 12 months smooths out the lumpiness. Does anyone notice a trend on all of these? Yes. Up. Very up. I think that's a technical term. Very up. Vehicle deliveries. Very up. Operating cash flow and free cash flow. Very up. Obviously some volatility. Net income and adjusted EBITDA. Very up again. This is the trend. People always get lost in the noise. What happened this quarter? What happened last quarter? And they miss the forest or the trees. Lastly, it's worth showing Tesla's operating margin progress trailing 12 months versus the auto industry and the S&P 500. Tesla, out of nowhere, from negative operating margin to industry leading. Not only auto industry leading, but higher than the S&P 500 average. And many of the companies in the S&P 500 are pure software. They don't make complicated objects and have to manufacture them and then ship them around the world. For Tesla to have done this, absolutely fucking stunning. All right, now we're going to run through my notes from the call. By the way, caveat, quotes are not verbatim. They're kind of what I was typing out as I was half listening and trying to pay attention as well as taking notes. And there'll be a lot of typos. Let's roll. This is hot off the press. First, Elon's opening remarks, obviously pointing out stuff that, the current macroeconomic environment is a challenge. Shout out to the fucking Fed. Operating margin remains among the best in the industry despite Tesla's price cuts. But of course, investors will ignore this because,
Oh my god, the prices, the margins, oh my god, what do I do?
people tend to look at Tesla in isolation and forget the broader implications and how well they're doing versus their industry peers. Also, growing volume, is a priority. Willing to sell more cars at lower margins, then harvest that margin in the future as autonomy is perfected again, something that Wall Street just will not compute.
What do you mean the margin was 19 point something percent this quarter, Tesla? We don't care about autonomy. Now, what's happening now?
I just really want to emphasize this because I called it a couple of days ago. If margins come in a little bit below consensus, they did. Wall Street is going to lose their fucking minds, flip out, the growth story is over, it's over, Tesla's multiple is too high, sell the stonk, blah, blah, blah. This is not wise. Will not age well. A few years from now, as autonomy rolls out, people are going to understand what Tesla were talking about here. It's in Tesla's best interest to install a large fleet to get as many vehicles on roads as possible to sell through all production. Even with recent price cuts, their gross automotive margin 2, 3, 4 times higher than many others in the automotive industry after the price cuts, yet investors still not happy. Unbelievable. Confirmation that Cybertruck Alpha production is underway, the volume line installation is also underway, and, surprisingly, delivery event is expected in Q3, not Q4, Q3 of this year. That's really fucking close. In case you don't know, we're already in Q2. That's next quarter. Q3 is next quarter. Let that sink in. And more than 150 million miles have been driven with FSD Beta. That's a data advantage that no one else has, and it really matters. Again, something that people are completely overlooking. You know what you can't stick in a spreadsheet? The value of the data Tesla's collected through their fleet and continues to collect to this very date. Elon also pointed out that there's actually a heavy focus on Tesla in terms of improving their neural network training capabilities. And also, Dojo could, not will, but could deliver a 10x improvement, in other words, an order of magnitude improvement in the cost of training. And, as we've mentioned in the past, could become a service similar to Amazon Web Services, which was initially developed internally for Amazon. Next minute, they're like, hang on a minute, people would pay for this shit. Would you guys like to pay for this shit? Oh, you would? Thank you. Next minute, Amazon literally becomes one of the world's most valuable companies. Literally on the back of Amazon Web Services. Not on selling books or physical products. Sorry to rain on your parade. And more confirmation, we will make as many cars as we can. It's a great time to grow our lead during tough economic times. Now, a few remarks from Zach Kirkhorn. Absolute beast, by the way. Shout out to Zach. Automotive gross margins was impacted by pricing and one-time items, including warranty adjustments, plus increased deferred revenue for some autopilot features. More on this in a moment. Some commodity costs are coming down. Also, obviously, Berlin and Austin are still dragging heavily on margins. Remember, 2 new factories ramping up is pulling the gross automotive margin down across the board for Tesla. The storage business is growing fast and becoming more profitable again. Tesla's energy storage business is a sleeping giant. Tesla's overall philosophy, pretty simple. Grow volumes as fast as possible. That includes vehicles and energy. Invest heavily into future plans, Cybertruck, next generation vehicle platform, the 4680 cells, storage, autonomy, and AI efforts. And the plan is to do this while keeping the business financially healthy. And now onto some retail investor questions. Everyone talking about pricing and margins. Surprise, surprise. Regarding the pricing adjustments, Tesla confirming they do their best to evaluate production output, macroeconomic conditions, and make decisions around pricing based on that. And they have real-time data. Again, more on that soon. Elon also confirming, again, that Tesla Energy is still likely to be bigger than automotive in terms of gigawatt hours deployed over the long term. regarding energy margins, and this is important because it wasn't just energy margins. This is a really interesting disclosure. Long term, Tesla expects their energy margins to be in the vicinity of the vehicle business. And then confirmation here, we generally look for mid 20% margins on each business. So spoiler alert, does anyone know what type of margin Tesla's probably targeting over the long term on average across their vehicles and their storage products? Starts with 20 and ends in 5 and then finishes with the percent symbol. They're aiming for mid 20%. Had an interesting discussion recently on Twitter. A lot of people getting lost in the short-term noise. It's not the right way to think about it. Tesla's margins this quarter or that quarter, irrelevant. Here's what you need to think about. What will the average margin across Tesla's products be throughout the decade? Tesla's just told us they're aiming for about 25%. Okay, some quarters it might be 17, some quarters it might be 32%, but overall, that's roughly where they'll be. The caveat here, of course, tail end of this decade, if Tesla can get their costs down enough, they're probably going to be able to produce an extremely compelling electric vehicle for about $12,500. These are based on my own assumptions. Come at me, bro. If so, I don't believe that 25% is a realistic margin. It's probably going to be a shitload more because they're not going to need to sell them that cheap. Time will tell. Just flagging that now. 4680 cells are on track, and the lithium refinery breaks ground this May, by the way. January, February, March, April, current month, May, next month. Tesla breaking ground on their lithium refinery next month. I think I heard right, output expected late this year. 4680s are still on track regarding their cost declines, so everything moving as expected. Regarding 2023 gross automotive margins, again, these quotes aren't verbatim, so don't hate me. Difficult environment to make predictions with lots of uncertainty, tailwinds and headwinds all at the same time. Within costs, there are some costs that Tesla controls and some costs that they don't. Within the bucket of things that Tesla does control, the most is around ramping Austin, then doing cost optimization on the factory once ramped, and that includes the 4680 cells themselves, which are being manufactured at Austin and going in the Austin-produced vehicles. The same is true for Berlin, although they're not currently producing 4680 cells in Berlin, and they're still completing localization. So basically, the plan is ramp volumes, hit capacity for stage 1, then optimize costs, then build stage 2, then do the same thing over and over and over. Again, I think Berlin's probably going to be built out in 4 major stages, each about 500,000 vehicles or so per year. Watch this space. Obviously, Tesla are also still eking out incremental improvements in terms of costs at their existing fully ramped facilities, Fremont and Shanghai. Now, regarding the stuff Tesla doesn't control, including logistics, this is moving in Tesla's favor. And then there's commodities, which, as they point out, has been a huge factor in costs. Tesla pointing out they're still in maximum pain for commodity costs. It appears that these costs kind of maxed out second half of 2022. They've seen a little bit of improvement, massive improvement in lithium spot prices. And Tesla confirming they do expect commodity prices to come down more, especially in the second half of this year. Elon also pointing out something just again.
Oh my god, there's no demand.
Orders are in excess of production. Just wanted to emphasize that. Orders are in excess of production. Now on to the analyst questions. Alex Potter asking regarding exports from Shanghai and exporting into new markets. A lot of people won't realize this. There are still numerous markets globally in which you cannot purchase a Tesla vehicle, period. Did you know that? You can't buy Teslas everywhere yet. Tesla's been strategic. Which market matters most first, then second, then third. They're rolling things out. Elon pointing out, individually these markets, very low numbers, but in aggregate, cumulatively, they actually sum up to a very significant amount of vehicles. Next time you hear somebody talking about demand, just remind them that there are people in countries today who'd like to buy a Tesla who literally can't because Tesla does not sell vehicles in their countries. A lot of people sleeping on this. Regarding FSD, Elon pointing out the current price is basically an option value on an autonomous vehicle. And obviously the value of that vehicle once autonomy is solved will be significant. By the way, shout out to everybody who locked in the FSD pricing on their Cybertruck reservations. Was it $7,000 US? Bargain, bro. Put $100 down. $7,000 lock-in for FSD. What's it now? $15,000? Talk about an ROI. That was the most obvious arbitrage move of all time. Elon having a bit of a laugh and pointing out, I hate to say this, but I think we'll do it this year regarding the solving of autonomy. Keeping in mind that this is on Elon time. I think we both suffer from severe optimism bias. I wouldn't have it any other way. Elon guessing that there'll probably be stormy weather for around 12 months and things start to get sunny around spring next year. So let's read between the lines here. They could be wrong, but if this plays out, what do you think happens to Tesla's so-called competition? They're fucked. What happens to Tesla? They'll continue selling through production. Doesn't matter what the margins are, whatever they need to be, they'll sell through production. A little bit of short-term pain for a lot of future gain. I'm not going to make any short or medium-term predictions about Tesla stock, but if Tesla margins effectively go nowhere over the next 12 months, I wonder what will happen to Tesla stock over the next 12 months. Tesla also pointing out the obvious, but stuff they haven't necessarily disclosed explicitly in the past. Tesla has a lot of fixed price lithium contracts, so they're not as affected by the lithium spot market. I've talked about this in detail in the past. Remember, which company knew they need a ton of lithium? Tesla, which company locked in the long-term supply contracts on lithium? Tesla, which companies didn't? Their so-called competition. Which companies are going to feel more pain if lithium prices are up? The companies that don't have the long-term contracts. Also, this is insane, but not surprising. Tesla will probably have more lithium refining capacity in the United States than all other companies combined. Elon begging, can someone please, instead of making a picture sharing app, get into lithium refining? Tesla's not doing it because we want to. They're doing it because they have to. Regarding the pricing strategy and robotaxis, Tesla just disclosed that the next-gen vehicle internally is called the robotaxi, as in the robotaxi platform, 50% cheaper. But all vehicles in Tesla's fleet will achieve autonomy, so Model 3 and Model Y will also be robotaxis. Interesting caveat here from Elon. To the best of my knowledge, we believe the current hardware can achieve full autonomy. Not will, but to the best of our knowledge, we believe. Interesting. Let's find out. Regarding pricing, about half the miss in terms of margins, the 20% target, is attributed to pricing adjustments made in the second half of the quarter. And Tesla also made pricing adjustments this quarter, which will bring down margins further next quarter, but about half the miss was attributed to things that are not recurring, e.g. warranty adjustments and autopilot deferrals. Those two things are non-repeating, so think about this. Half of the reason that margins came low this quarter were one-off things that will not impact next quarter. Regarding pricing, demand, and so on, there are two major factors at the moment. Interest rates. If rates go up, it's equivalent to a price increase. A lot of consumers are like, can I afford the repayments? Can't get the loan because interest rates are too high? Oh, I can't buy the car. And uncertainty. Obviously, in uncertain times, people are fearful of recession, rightfully so. People will postpone big new capital purchases like a new car. This will cause pent-up demand for new cars. Interesting and important. That's totally true. I've talked about this as well. Right now, a lot of people are focused on Tesla, but if we think more broadly, what's happening to the overall automotive market? Everyone's thinking, oh, maybe not a good time to buy a car. Some of these people, unfortunately, still think it's a good idea to buy an ICE vehicle. But guess what? By the time they're ready to actually buy a vehicle, a year or two from now, when we've got through this winter, they're probably not even going to be considering an ICE vehicle. This is actually going to accelerate the EV transition and the bankruptcy of legacy automotive companies. A juicy bombshell here. I've never heard numbers disclosed before, but Ben Kao asked about Dojo. Check this out. Dojo is a long shot bet, but if it pays off, it will pay off potentially in a very big way. Like, in the multi-$100 billion level. Now, guys, I don't know if you know, but multiple hundreds of billions of dollars of revenue is not very much at all, so we can completely ignore this. It's not worth thinking about anymore. And it doesn't have significant financial implications to Tesla or their future profitability, so don't think about Dojo as a service ever again. You should definitely ignore it. It's not an incredibly significant potential revenue and profit generator for Tesla in the future. Just like AWS didn't carry Amazon from a speck to a gigantic monstrosity of a company in terms of its valuation, profitability, and revenue. Elon confirming still put it in the long shot category, but it's a bet worth making. Also, check this out. Finally, confirmation, 2 bombshells in a single answer. Shout out to Ben for getting this out of Tesla and the team. We're big believers in heat pumps, and that is on our list to do a heat pump in the future. Can confirm, finally confirmed, Tesla is actually going to do a heat pump. Of course, I called this years ago. We all kind of knew it was going to happen, but they've actually now said it's going to happen. Obviously, Elon Musk emphasizing a fleet of millions of vehicles with a software update, which allows them to become autonomous, will probably be the biggest asset value increase ever. Regarding order flow and data and Tesla's agility, Elon said this, quote, I'm not sure there's any company on earth with better data than Tesla except Starlink. We know how many cars were ordered yesterday. Real-time data, no latency. Other companies have a lot of latency. Think about it. Typical automotive manufacturer makes cars, sends them to dealerships. They go to the dealerships. The dealerships then have to try and customers and sell it as much. To give customers a great experience and a really good deal, because everyone loves going to a car dealership and negotiating the price on their new vehicle. Doesn't everyone love a good car salesman? Yeah, exactly. And then eventually, the dealerships report their sales from all the over the place. And eventually, these companies figure out how many vehicles they sold. Huge lag. Tesla, every 24 hours, they know exactly how many vehicles were ordered everywhere on Earth yesterday and make adjustments accordingly. Elon also slyly adding a comment regarding latency, and a lot of it, the government also has major latency on the data they're referring to. I wonder what he could be talking about. We're just asking, what does it take to hit the clearing price for vehicles? We're literally looking at it 7 days a week and try to make the least dumb decision that we can. Bit of clarification from Tesla. You guys have got to stop looking at EV market share. It's just how many cars are we selling? All cars in the future will be electric again. If you hear people referring to EV market share as if to suggest that there's anything relevant at all in EV market share as opposed to share of the overall automotive market, they're just a muppet. I don't know how else to say it. I've been saying this for fucking years, okay? ICE vehicles are going away. There is no EV market. There's the car market. And the future of the car market is 100% electric. Mark asked, are 2 million vehicles still possible this year? Elon responding, these are volatile times. From a production standpoint, if things go well, we've got a shot at 2 million this year, but we feel comfortable with 1.8 million. Tesla asked, how far are you willing to take margins? I mean, we kind of knew this, but let's read on. It's difficult to say what the margin will be, depends on the macroeconomic environment, e.g. if the Fed were to lower rates, that would be super helpful for demand. If they raise them, rest in peace. If we look past this year, maybe to mid next year, as long as there's no insane event, shout out to World War III, the pain should be over by mid next year. More on margins in a moment. Zach pointing this out. We're investing in what 2024 and 2025 will look at. So what happens to Tesla's margins in the next few quarters really only impacts what they can invest in terms of their plans for 24 and 25. And remember, they've already got $22 billion in cash and cash equivalents, and they're still making billions of dollars more per quarter. And will continue to make billions, plural, billions of dollars every single quarter, even if they massively cut prices again. We're planning to keep the business healthy. I want to caution folks not to read too much into the near term. These are Zach's words, not mine, but they could have come out of my mouth. We are making sure when we exit this macro environment, we exit in the best way possible. Tesla confirming, not a direct quote, that they'll be okay over the short term with paper-thin margins. I mean, if they have to sell the cars for no profit, they will. They probably won't have to. Extremely unlikely, but you never know. But if they need to, they would. Because again, build out the fleet, future software revenue. If you've got a long-term perspective, you understand. And if you don't, oh my God, margins, why would you sell it for 0%? I'd sell a Tesla. Regarding affordability, for most people, their ability to buy a car is a function of can they make the monthly repayment or not. In some cases right now, people can't get a loan at all. Again, in isolation, oh no, this might affect Tesla. Think more broadly. What happens to the rest of the automotive industry? Like I said, this is the best thing that can be happening to Tesla. Some people won't understand this, but if you really think about it, you'll get it. Tesla has the pricing power, the superior product, is making 2, 3, 4 times as much money versus another automotive manufacturer per vehicle sold. This is after price cuts. Hello. There is quite a powerful story here. Tesla is in a uniquely strong strategic position because we're the only ones making cars that technically we could sell for zero profit for now and then yield tremendous economics in the future through autonomy. And again, this is just something that Wall Street are unwilling to wrap their heads around. Many retail investors they can't fathom, they don't get it, does not compute, it's irrelevant, let's ignore it. Big mistake. Really big mistake. You guys have no idea how much I'm looking forward to clipping these videos of me pointing this out, Tesla pointing this out, once autonomy is solved. Going, hey, remember when you idiots were freaking out about 19.3% gross automotive? Hello? I can't fucking wait. Elon, rightly pointing out, not sure how many people will appreciate the profundity of what I've just said. Not many. But it is extremely significant. Adam Jonas, after wishing Elon best on the Starship test flight today, regarding Tesla, Twitter, and X.com, any synergies? Elon throwing this out. It could potentially make it easier to buy cars. So, speculation alert. The f*** does this mean? Let's think about this. What could this mean? Well, maybe you may be able to purchase a Tesla vehicle through Twitter. It doesn't really sound right to me. I mean, maybe that's a feature or functionality, but yeah, whatever. You can do that anyway on your phone. Hang on a minute. What else could this mean? Spoiler alert, the Everything app. What do you guys think? What are the odds that maybe in the future, Twitter may in fact be able to provide finance to consumers to purchase vehicles? Pretty confident this is going to happen. No one said it out loud yet. I tend to make these long-range predictions. Generally, I'm more often right than wrong. What else could this be? I mean, seriously, what else could this be? Could potentially make it easier to buy cars. There's definitely something brewing here. I'm not sure exactly what Elon was getting at. Please leave your speculation below. How could Elon's acquisition of Twitter, which will eventually become the Everything app, and he has mentioned finance, banking, everything, the whole kit and caboodle, the whole vision for the original PayPal, which wasn't just transactions, but all banking, which obviously will include loans, savings accounts, high interest accounts, the whole kit and caboodle. I think providing finance, as in loans, not just for cars, but also mortgages, etc., is on the cards. I've talked about this in the past, and the pieces of the puzzle are starting to fit together. Quote, we're not trying to take pricing actions in order to deliberately undermine competitors. We really don't think about competitors that much. We think about making the product better and more affordable. But we do have this unique strategic advantage that we're making a car that, if autonomy pans out, and we think it will, that asset will be worth a hell of a lot more in the future than it is now. We could technically sell for zero profit now and still make a major profit in the future. More obvious things being pointed out to conclude, the margin profile of Berlin and Austin once ramped will be almost as good as Shanghai. Not quite though, cheaper labor, parts and components. I mean, it's China. Most people, I think, understand why. It's a little bit cheaper to get most stuff done in China. So despite Tesla destroying record after record after record, quarter after quarter, including this one, Wall Street not happy. Margins were a little bit below consensus expectations. Therefore, it's the end of the world. I mean, I predicted exactly this. Go watch yesterday's video. Remember I described how easy it is to predict the behavior of NPCs? Classic example. I'm a long-term investor, so I give literally zero fucks what's happening this quarter, next quarter, last week, last month. I don't care. What I'm looking at is the long term. And Tesla themselves have disclosed they're aiming for mid 20% margins on their products over the long term. That's what we want to be focused on. What is the average margin on Tesla products throughout the decade? There'll be times when they're way above, and there'll be times like now where they're a little, maybe even a lot below. But you don't want to be getting lost in the weeds here. A lot of people are panicking right now. They're freaking out. Recession, oh my God. What if the margins go to 12%? What if they're 8%? Oh my God. I just don't know how else to say this other than you guys can panic and cry in the corner and ask for daddy to hold you. And I'll be here in 2030 to remind you that you forgot about what happened in 2023 because it was an irrelevant spec and Tesla continued to execute, dominate, and transform industry after industry. And look, I've said before, hope is not a strategy, but I hope that over the next 12 months, Tesla margins go nowhere, even lower. Tesla stock goes nowhere, even lower, and I can continue to buy at bargain basement prices. As I've said repeatedly, I still today see Tesla stock as the best risk-adjusted opportunity in the stock market. No doubt there are better opportunities, but I just don't know about them. It just boggles the mind. Short-sighted nature of Wall Street and many investors. Like, it really does stun me. 10 years' time, no one's going to remember what was going on today. A few quarters, a little bit of pain through the cycle. I mean, I think what I'm trying to say is the disconnect continues to widen. Make of that what you will. I feel like I'm forgetting something. Oh yeah, check out Athletic Greens AG1. Most of you will know now, I've been taking this stuff for more than 2 years. I absolutely swear by it. One scoop, once a day, every day. And it's had a profound impact on how I feel, perform, and show up. And that's the reason I continue to bang the drum on this. There's a lot of upside to feeling and performing your best and very little downside, if any. An impeccable diet will only get you so far. AG1 is packed full of 75 high-quality vitamins, minerals, and whole food source nutrients. And in addition to that, it has digestive enzymes, prebiotics, probiotics, and adaptogens to help you deal with stress. Promotes gut health, boosts immunity, and meaningfully increases energy, at least in my experience and that of almost every single person who's tried it. Plus, if you head to athleticgreens.com/SMR or use the link in the pinned comment, you get a 1-year free supply of vitamin D3 and K2, and you'll be well on your way to feeling and performing your best. No need to take my word for it. Here's what some of you guys and girls have to say. I see comments all over YouTube and Patreon and Twitter. Here's a DM I received a few weeks ago. Hey, thanks for the great content. Just ordered AG1 using a link. I hope that once I start drinking it, I'll be just as cool as you. Very low bar, my friend. I responded, let me know how you're feeling in a few weeks. And sure enough, I got a follow-up DM. I feel like I have a lot more energy since I started on AG1. Thanks for the recommendation. Simple, straightforward. Take a moment to think, could you do with more energy? Maybe the answer is no, but I think in most people's cases, probably yes. More energy, you get more done, move your body more, exercise more, get through the day a little bit easier. I think one way to describe Athletic Greens AG1 from my own experience has been like turning the difficulty level on life down just 1 or 2 notches. More energy means everything's easier, you've got more capacity to do what you need to get done. On screen now, a bunch more testimonials. If you guys want to read them all in detail, go for it. But there are a lot of recurring themes here. More energy, more motivation, more exercise capacity, better recovery from exercise, positive impact on mood, sometimes even cognition. Some people finding it's improving their sleep, others finding some assistance with long-standing health issues. And interestingly, and no doubt due to the adaptogens to help you deal with stress, a lot of people are mentioning that they're seeing a reduction in anxiety, including the example on screen now. Female viewers saying it's helping alleviate some of the symptoms of their period and meaningfully increasing libido. Many folks feeling more motivated, more ambitious, more driven, getting more done, more switched on at work. Improved mental game, reduced social anxiety, not just overall anxiety. And I think this one on screen right now really sums up my own experience. This person leaving some feedback, despite turning 40 years old in June, they're now feeling like they're in their mid-20s. And this sums up my experience precisely. I literally feel like I'm 20 years old again. I don't look it, but I really do feel it. So what are you waiting for? Head to athleticgreens.com/SMR or click the link in the pinned comment. Start your daily health habit now. And please, I'd really like to know how you're feeling in a few weeks' time. The reason I ask is I'm trying to have a positive impact here, and I like to solicit feedback. No, I'm doing some good. That's the reason I continue to bang the drum on this stuff. Just trying to help you guys and girls feel better. Seems to be working. So, click the link in the pinned comment or head to athleticgreens.com/SMR. Let me know how you're feeling in a few weeks' time. Don't forget, I'm still producing exclusive content, more than 330 videos and counting over on Patreon. And in addition, you can now subscribe to my exclusive Twitter content as well by heading to my profile at Stephen Mark Ryan, clicking the subscribe button. I've already posted some exclusive text and video content, and there's plenty more to come. And a big thank you to the 500 plus people who've already subscribed in the first 48 hours. Really appreciate your support. So, see you over on Patreon and or Twitter subscriptions. Love ya.